The market seems to be holding on to the gains that we've seen coming through this week. How sustainable is it?
Well, like I've said here so many times, as long as the interest rates are going to keep trending downwards, and we've seen the latest one-year bond that the trend has been sustained, and as long as inflation will continue trending downwards, we expect that the market will also either sustain or grow, given that, amongst other things, that the profits that most companies have announced, seeing revenues have been going up, they've been able to manage their costs, and their profits are higher, and therefore, if you're saying that that's how it's going to be in a tough year,
yeah,
when things improve, you expect further improvement. So it's kind of building confidence in investors on one level. On the other level, valuations still look good.
Yeah, but one has to say at the same time also interest rates do remain extremely high, and certainly the yield that you'll be earning on that interest rate front is certainly very, very competitive against results from equities which are uncertain. I mean, there's no guarantee that you'll get your 10, 15, 20% returns.
The important thing is trend, because if you can catch asset values when they are low and the trend moves higher. You see, for example, in fixed income, yes, interest rates are about 25%, 20% annualized, depending on which instrument you are in.
Yeah.
The T-bill rate is at 16, 17%. But then that will take about three months
yeah.
3 months to get a quarter of that. However, you can get almost that with in stocks over a week or 2 weeks, depending again which stocks you're looking at. So if you can get 3% over 2 weeks from a stock, as against 5% over a quarter, guess what? A lot of people will be looking at the stock and thinking, well, that's my cup of tea, and they're looking to do 3% every month for the next 3 months, and
yeah.
they'll outperform the T-bills.
Yeah, indeed, the trend is your friend.
Yes.
Talking of trends, we've seen this week, let's drill down into some of the counters. We have seen KQ coming under pressure this week. That stock today down another 6.4%, taking a 24% drop since they announced that rights issue. What is the market saying to KQ here?
Well, the encouraging thing I would imagine for KQ is that after having hit a 12 shilling and 55 cents low today at around between 10 and 11 o'clock in the morning, we saw a rise. Last transactions are between 360 and 330 towards the end of the trading session. So you could argue there's a recovery, and I think investors can see the value in the stock. If you look, taking at its book value, its book value last reported was 45 bob.
Yeah.
If you assume that dilution from the new shares, assuming full uptick, then you're assuming again that book value should come in the region of 22 shillings.
Right.
So investors can actually see the value in it. So the question is, where do you take it? Do you take it from the share,
yeah.
When it hits the bottom,
yeah.
or do you buy the right?
Right.
And of course, seeing that the issue is underwritten,
yeah.
That takes off the pressure from the company. The company will more or less get its money. The issue is whether for the investor where to take, and for the underwriter whether that's a good idea.
Yeah.
Of course, the underwriter is locked in, so for the investor, he'll just pick it up at 13 or
yeah.
13.50 because there's value in the company.
Yeah, but Johnson,
sell the rights.
That's where the question is coming in now. How many investors are likely to follow their rights in this instance? Aren't we looking here at a situation where potentially people could well decide if the stock keeps going down, they might as well buy the shares off the market rather than follow their rights here because there is no value here?
Well, it's an issue of liquidity. Of course, for the retail investors, it's an easy take because there are not too many shares. You don't need to stock up too many shares from the market.
Yeah.
But for the institutional investors who want bigger positions, perhaps for them it may be a better idea to pick up the rights of the market and buy, and because honestly, how many shares can you get at 12.55 or 12.60?
Yeah.
The panic sells are not by too many people. It's a small proportion.
Yeah.
And of course, there's a stare down with the buyers. So buyers are not bidding up too much, and sellers are not going down too low. So the actual trades are not so many.
Yeah.
But if you want huge blocks and you're an institutional investor, probably the best place to get them is through buying the rights.
Yeah.
And then converting them to shares.
To the shares, indeed. Point well made there.
So
But I've got one more point on that, and it's around what will happen to those shares after the rights have been taken up, because you're likely to see that stock continuing under pressure, because if shareholders don't follow their rights, then the underwriters will have to take up those shares, right? And if they do take up those shares, you're going to have this pouch of sales that's going to be available for trading, keeping that stock under pressure. Do you think, though, that they will be able, number one, to raise the money that they need from the shareholders? And then secondly, that stock, is it likely to remain under pressure once the rights have come and gone?
Well, you see, the government is taking about 10 billion.
So they'll follow their rights.
Because, yes, this is the really, in fact, I think for government doesn't have a choice, because for it to remain a national carrier, there are certain minimum standards it must meet, and one of them is local ownership. So that for that reason, government must take up its rights. However, and KLM is also bound. I mean, it wants to take up its rights.
Okay, so they
have to
follow.
So the question is for the 51%.
Yeah.
Yeah, for the 51%. So at least 77% of that share is held by institutionals.
Okay.
And who probably don't want to see their holdings diluted. So again, and it's also a good opportunity to average down. So they might be thinking of taking it up. So I'm not too worried, because the retail segment is not so big.
Sure.
And again, it also depends on the underwriter how they want to take it up. Because one thing that we saw after the KCB rights, which was also equally big and had similar fears, is that at the end of the day, in the final analysis, the company follows the fundamentals. So at some point, it makes more value for more sense for the underwriter to hold than to sell at a loss.
Yeah, no, for sure.
So if you're gonna get, if you're gonna get it at 14, and the true value ought to be anywhere north of 18 bob. I mean, they're justified in holding and taking up the profits, perhaps, which is a lot higher than they will have made between now and the time they're selling on any other instrument that they'll be holding. So both for the company and for the underwriter, I think it makes a lot of sense, as long as they're able to hold to hold for, say, 6 to 1 year, 6 months to 1 year.
Yeah, I'd imagine. I'd imagine, though, Johnson, that there will be many unhappy shareholders. But we must talk about what's going to happen to the market next week. Let's talk about next week. So we have seen these 2 days of gains coming through. The last one yesterday, just edging up really, and today it's a much stronger gain, 0.7%. How are we doing on the amount of shares available for trade side, and also in terms of prospects next week? What are you seeing?
Well, we've seen activity improve, and perhaps that's a reason. It's because of rebound in prices again. So for anybody who wished to take a position and saw the shares trending downwards and thought they will get them cheaper, now is when they're getting back in, because it doesn't look like they're getting any cheaper. So because of that, we are almost confident that, or we are cautiously confident that next year again we'll see the trend pick up or continue, for that matter. So that because we're done with the period of consolidation, now again we're seeing pickups with 3 month, 6 month investment horizons, very little speculation now coming through. So institutionals are getting back in. We're seeing them picking up a bit of shareholding. Foreigners are still here, that are giving the market a bit of support. So again, because of that, we're seeing that next week we expect the stock, the indices to edge up maybe 2-3%.
Okay, he's put his head on the block. Johnson Nderi, research analyst from Suntra Investment Bank. Thank you for joining us live from our studios in Nairobi.